Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Saturday, December 14th. We're going to take a look at NIO. So NIO is starting to get quite interesting. Let's just back up in the timeline a little bit, and I'm going to draw some sort of chart analogies here, if you will. If you look at this prior swing high where it tried to fill that gap, and we look at the downtrend resistance that it developed, see this gap that it had here, and then almost a year ago, we're about 2 weeks away from it being a year ago, it tried to fill that gap and it just rejected right off of it again and didn't get in there at all. And what it did then in the meantime was, as it sort of recuperated in the like $5 to $6 range down here, it developed this downtrend resistance, right? And it sort of banged off of it a couple of times. Ultimately, it punched through it and got some distance. Now, it wasn't the most sort of impressive and remarkable move, but it did get out from under it. If you've been watching any of my other videos and I talk about downtrend resistance that a stock is currently engaged with or is sort of like freshly trying to break out of, Lucid comes to mind, for example. This is what I'm talking about. It doesn't have to be the most amazing move ever, but it got out and it got some distance from it, and it didn't just slip back underneath that downtrend resistance, which is always sort of the concern for me. Now, what it did then is, after it had sort of swung up a bit, tried to sort of match this high but fell short, it kind of came into a Goldilocks zone, right? It didn't swing as high, it didn't swing as low, and it had put in another downtrend resistance, which then, after it came pretty darn close to the low, right? Probably this candle came in at a low of 363, so 2 cents higher than that 361. It was able to start to grapple with this 390 level that we had on the chart and punch through this downtrend resistance. So, right, this is 2 for 2, back-to-back downtrend resistance punches. And I'm not saying, again, that it was the most tremendous move in between those two breakthroughs of the downtrend resistance, but it did its job in terms of not slipping back to or below the downtrend resistance. And now that brings us to our most recent swing up here. Came just shy, what is that, 10 cents shy of that 781 that we have on the chart. As far as I can tell, the last chart that I had made, or the last time I updated this chart, was in April of this year. So these levels are holding up really well. So just so you know what you're looking at. And we are now developing, I believe, this downtrend resistance. If it does come off of the swing highs like the other ones did, then maybe it could be up here. But this at least incorporates this attempt and rejection, and then the most recent attempt and rejection. So my question here is, can we get a breakout through this downtrend resistance again? And if we can get 3 for 3, and not to say that anyone made huge amounts of money, especially if they held from, buying somewhere down here and then they found themselves back down there again. But what we're seeing is, different from this swing, right? This swing high wasn't as high as the swing high over here, where it sort of double topped and came down. What we see here is a swing high much higher, right? This topped out about 605, and this came all the way up toward that 781 level. And right now, if this is the low it puts in, then it's a significantly higher low than that previous low there, right? So everything's getting spread a bit further. This high fell short, but it was pretty close. This low stayed higher, but it was, like we said, within 2 cents. And so that, to me, says a couple of things. One, if it can at least hold this as the bottom, right, or at least that like 419 level, it's getting significant more upward momentum and upward traction, even though it is still NIO and it is still a very volatile stock, and it's going to swing wildly in both directions, at least for the time being. And just because it swings back down low and crashes really hard doesn't mean that it can't have something that, when we zoom out and look at this in the future, that it will look like a more sustained effort and recovery. So I don't know that that's what will happen. That's a very optimistic notion to have, but I think if there was an opportunity for it to happen, this, is as good of an opportunity as any time. And so, again, if I'm a NIO bull, here's what I'm looking for. Here's my sort of like best case scenario. Let's just take out of the equation the concept of like a V-shaped recovery, right? That came up toward the 781 and it comes down and that's just going to go zoop. So if we take that out of the equation, my best case scenario is it continues to hold this 452 area, or at least it doesn't dip below that 419, right? I would feel okay with that. If it starts to slip 419 and starts treating it as resistance, I would get a little bit more shaky in my optimism. But for the time being, if it comes through here and then breaks this one like it broke the last couple, and starts to make a motion toward that 519 level, I would start to feel like, okay, maybe we're going to go again. Now, I don't know what go again will look like, right? Obviously, the last time there's been some nice percentage gains upward, but then there's also been some strong losses downward for folks who maybe chased on the way up and got bagged as it came back down. So it may look something like that, but again, looking at the longer view of things, it may start to accumulate enough downward resistance breaks and enough higher highs or at least higher lows that it starts to move things in a more upward direction, right? You can see it's not really developed yet, but there is an ever slight upward support that could start to take shape in this action from back, about in April, like when we were last talking about it, up through the current action. So that's what I'm mostly interested in. If it gets really leggy again and starts to repress toward that 781, I wonder how hot and heavy the sellers will be to come back in. It would only be a second attempt at it, so I wouldn't necessarily feel that the sellers would be exhausted yet. But it'll be interesting to see what that sort of battle looks like. And I only mention that because up here we do have still this gap that's outstanding, 960 to 1022. And to the extent to which it gets within proximity to that gap, it could be quite interesting. There could be some strong motion to and through that. But it has a lot of work to do to get there, right? We're talking about more than doubling the 451 that it closed at on Friday. So that's my look from there. I'm going to leave these levels as they are. I'm not going to extend above or below. We're covering a lot of ground here. We're actually coming down to 287 all the way up to 781. And right now it's sort of smack dabish in the middle of those. At 451, and so plenty of room for us to catch it if it does start to get on the upper couple levels, right? If it starts to press through 7, we could always come back and take a new look, add in some levels on what that approach toward 960 might look like. And similarly, hopefully it wouldn't slip down below this 361 and start pressing toward this 326. That sort of blows this whole potential move that I'm talking about up. But, we can always come back and address that if it happens as well. Now, looking at the EMAs, I actually hadn't looked at them before. Okay, so, this view, to me, I harp on this in many, many videos, but this gray EMA right here is the 183 EMA. To me, it's a vital level, especially for these stocks that have long-term sad stories, right? You see how often it rejects off of it. Either it makes an attempt to push through it and constantly is getting drawn back toward it, right? And sort of persistently gets less action over it, right? Nice attempt here, but it got sucked right back down. It was able to get less legs over it this time, and then it really bled down through, and then it just started rejecting right off of it, right? Reject right off of it, reject right off of it. And then we had another attempt over here, pretty short-lived, right? And then it rejected right off of it. Another short-lived push recently, right? That's that push up to 771 that we were just talking about. And what do we see now? We see a rejection rate off of it, or at least that candle that came in on the 9th of December was a rejection rate off of it. So, this one maybe gives me a little bit more pause because it is sort of doing that thing where it tries to jump through the 183. It gets some nice distance from it, but it gets drawn right back down to it. And then the next attempt, which is this one, and it comes through, but it's, tremendously lackluster distance-wise, right? It doesn't get the legs over it like the previous swing did. And then we get a candle, the next one doesn't even punch through it. It pings right off of it. So I'd maybe keep a strong eye on that. Honestly, that might be the best indicator at the moment of what it's going to do with this 183, because if it were to get some motion through it, again, that would break a little bit of the pattern that we've seen in the past that, we just went through on the chart. So this sort of maybe has a dominant position to me in terms of like where I would rank signals that I'm looking at on the chart. Now, volume-wise, tons of volume through this range, so there's plenty of opportunity, but there's going to be walls that it's going to have to break down and then build fresh volume above, right? You see, breaking through these walls, or I guess when this was happening, it would have looked like this, right? But it's breaking through these walls, and then the volume just gets really too thin, right? It gets too thin to sustain. You can see it down here, right? You can see the punch through, and then the volume just doesn't sustain in order to help build and grow that run any further, and it just sort of shrivels up, and therefore the price withers. And so that would be another thing I'd maybe look for, to see where there is sort of scant volume, and if that's reflective of the volume as it starts to move into those price ranges, right? So if it starts to move up here and the volume sort of dwindling again, it might start to look like, okay, I don't know that there's going to be the legs to really continue to push this through because the volume's just not there. Or if the volume continues to pile in, maybe even builds, then yeah, you could take the opposite view of that for sure. So I'm going to put these back on for now, but like I said, we'll take one more look at the EMAs before the outro on the video, because I do think that is maybe the most important thing at the moment. Now, of maybe some interest, I don't know, we have a TTM squeeze triggering at the moment where, what is that, 6 candles in? You can't see it because you're just looking at my screen, but I have a tremendously bright sunshine coming through the window. It's making it really hard to see the screen super clearly. But if we look back here, we had a lengthy trigger and a fire that resulted in basically nothing. And then we had a re-trigger and a refire, and that at least got a move from, like, what is this, low 4s up to that 771 that we talked about. And now pulling back down, we get a, sort of a blip trigger candle, so that might have been nothing, and now we have a lengthier trigger. So, nothing tremendous. Compression on the phase oscillator, ATR, we're just sort of sitting at the base ATR. It hasn't gotten much legs. Yeah, it hasn't gotten a +1 on the ATR since back in September, when it pushed above the call trigger here and really had to sort of like triple, quadruple confirm off of that call trigger, and then finally it made a pretty brief move, but it did reach that +1 ATR at that time. But since then, it's not really been able to get any major motion, even though it hit the put trigger here and sort of re-rejected off of it late in the month of October. It didn't come anywhere near either of the ATR levels below it. And so, yeah, to me, thinkorswim, sometimes it's really helpful. In this instance, at this point, I don't think it is. I really think EMAs are the dominant thing for me, and then the levels that we have on the chart. But I would really want to see that 183 again, or worst case scenario for the bulls is we see here it got pinned under the 21, rejected off of it again, had this, I don't want to say random in a sort of a demeaning sense, but had this gap up here at 1236, came down, filled that gap really quickly, and now is pinned well below the 8 and the 21 EMA. So it has a lot of work to do. And so I guess it depends if you want to take a more sort of cautious view. The EMAs seem to stand out to me as being that sort of cautious view. If you're, wanting to sort of look for every potential major bounce point, which the EMAs just won't give you because it's pinned underneath all of them at the moment. It's only going to give you rejection points. If you want to look for every potential bounce point, these support and resistance levels may be sort of more attuned to that way of thinking, though I think it is probably a little bit more on the aggressive slash, hopium side of things. All right, folks, so I hope that you had a good trading week and that you have a great trading week ahead and enjoy your weekend in between. And as always, I appreciate you watching, and I will see you in the next video.